I thought I would share my thoughts on the gold, silver in US dollars, and precious metal miners markets recently after a pretty sizable correction. Some mining stocks are down 10% from their recent run. Gold is still holding in US dollars above $1,500 per ounce, and silver, and this was predictable. On its first attempt, silver did not hold the $19 per ounce level. Silver is still slightly above $18 per ounce at $18.21, but we'll see if it holds 18. In the long term of things, I'm going to talk about that things are actually setting up to be good, even though the correction is painful for some people who are looking for short-term profits. I would be on the lookout for things including margin requirements being raised massively by the CME, Chicago Mercantile Exchange, CME Group, and COMEX. I would be on the lookout for that if they start massively raising margin requirements. I was looking for stories on that, and I did not see any. I searched in multiple search engines in the last week and didn't see any of those yet. But there are good signs, and there's a number of stories out that are actually long-term setting up for good things for gold or silver. The global macro situation has not changed, and that is good for gold and silver long term. In the short term, anything can happen, which means that in the short term, prices could go slightly lower, but there is more smart money starting to buy dips. Not everyone's starting to buy dips, but there is more and more smart money, professional money managers starting to buy dips. Before I talk about some of these other stories, let me talk about Mark Mobius. If you're not familiar with Mark Mobius, he has been a professional emerging markets and commodities investor for a very, very long time. He is normally not very bullish gold. In the past, I think a couple years ago, 2 or 3 years ago, he was predicting a gold rally, and then it was a short-lived one. He was not normally, you could never call him a gold bug. He has a very good long-term track record. He's won a bunch of awards. I have his bio here. I could read it, but he's won around a dozen awards in the last 20 or 30 years. He's considered one of the most successful emerging markets investors of the last 20 years. He's in his 80s. And on August 20th, he did an interview. It was published on August 20th on Bloomberg's YouTube channel here, and I'm going to play you a clip. It's about a minute long from Bloomberg Asia interview that Mark Mobius did. He is an emerging markets guy, not a gold bug. Listen to what he has to say about gold.
And Mark, at this stage, I just want to bring in gold. I mean, it's still hovering above 1,500. It's down slightly today, or pretty much flat. But some say that there's a rally to be had going forward, given concerns about recession, given geopolitical concerns as well. Where do you think gold is headed, and at what level should people be looking to buy gold?
I think you have to be buying at any level, frankly. I think gold long-term prospect is up, up, and up. And the reason why I say that is money supply is up, up, and up. You know, with the efforts by these central banks to lower interest rates, they're going to be printing like crazy. And then you have all of these currencies, new currencies coming into play. I call them psycho currencies because it's a matter of faith whether you believe in Bitcoin or any of the other cyber currencies. And I think with the rise of that, there's going to be a demand for real hard assets. And that includes gold, because gold can play a role not only as an asset, but also as a currency.
How much of gold should you be holding in your portfolio?
I think about 10% makes sense, and the rest in high-yield stocks and maybe a little bit in bonds. But bonds I'd be cautious about at this stage of the game. But yeah, about 10% would make sense. I'm talking about physical gold. Now, you can also buy gold mining companies, but that's not that attractive. And you can buy ETFs with gold reserves, but they are susceptible to government takeover. So I think you've got to have physical gold.
Okay, I think that's gotten my point across. So interesting stuff that longtime legendary emerging market investor Mark Mobius, who I would not call a gold bug, and he sounds a lot like a gold bug there. He sounds like he is buying physical gold on every dip. Now, I don't agree with everything he said. He was criticizing gold miners. There are some good gold miners, especially they're not gold miners, but the best precious metals, royalty and streaming companies, the 5 largest ones. Though some of those are on a big discount, although Franco-Nevada, which is the creme de la creme, Franco-Nevada is still almost $100 a share. It dropped a little below 2% down to 96. I wouldn't call that a bargain. In 2013, when I was working at Investing Daily, I remember it was in like $42 per share. So imagine buying it back then. You've done well, and with dividend increases if you bought it back then in 2013. So gold, what he was talking about, and this was interesting that he brought this up. He talked about how the gold ETFs, GLD and some of the others, could be confiscated. That's some interesting stuff. He thinks they'll be confiscated. Very interesting. So there are stories that are actually long-term bullish for gold now. And one of those is Indian silver imports. So Indian silver imports, this article is from a couple days ago, September 4th, from Steve St. Angelo, SRS Rocco report. India silver imports tripled in July as prices rise. It's a little surprising that the imports would increase so much despite the prices rising. As the silver price began to take off in July, Indian silver imports surged threefold versus the same period last year. Something must have motivated the Indians to import more silver because the summer months haven't typically been a strong buying season. So you have Diwali. For those of you who are not familiar, you have Diwali coming up soon. I think it's in about a month. And Diwali normally is for Indian weddings. That's when the big buying for gold occurs. So normally gold's rally that has occurred in April and May up to recently, the big rally in US dollar gold price of gold and silver and also mining shares. Silver lagged for a while, but it had been trending. It had been catching up for the last month or so. And normally seasonally, guys, that was not good for gold. For seasonal, at least in the past. So I think it has to do a lot with the global macro situation and how things are rapidly deteriorating, whether it's emerging markets, net capital outflows, the money coming into the bond market. And then we have people like Mark Mobius, who I just played the clip for you guys. Also Jim Bianco. Jim Bianco's not a gold bug either. Remember, I covered this a couple in the last week or two. Jim Bianco now, not a gold bug, recommending accumulation of gold. So more people are starting to say, you know what? I don't trust the central bankers anymore. They've made things worse. RR says soon fiat currency will have no yield and negative. Okay, so what is good news for gold and silver long term? Let's look at the copper price. The copper price is down to $2.62 a pound. And if you look at the 5-year copper chart, it's in a clear downtrend. And if you look at the 1-year copper chart, it crashed, I think, let's see here, let me pull up I'm on infomine.com. I'll put a link to it if you want to look at it later. The copper price crashed in March. It started off it rallied strongly, probably Chinese buying when they actually had more dollars, or they were buying a lot, accumulating, anticipating that they were going to not buy much for the rest of the year, which happens in China. It sounds like there's a very interesting interview that just came out on Real Vision Television with Christopher Balding. If you want to take a look, he's talking about how China may not be buying as much metals internationally because they don't want to waste their dollar reserves on that. And so they'd rather have higher cost, lower quality mines in China for iron ore and other materials, even though they're basically mining at a loss. But they don't want to spend the dollars on those things to import those. So the copper price, if you look at the 1-year chart, the copper price got a little above $2.95 a pound in March of 2019, and it's been in a clear downtrend since. It has had a little rally lately, but it's hovering. It looks like it's in a bear market. The big crash was from around $2.96 down to about $2.64 in end of May, early June. And then it rallied a little bit with more volatility, and then it had a big drop down almost to $2.50 at the end of July, either early August or end of July. And so it looks to me like, yes, there are some rallies in copper, but Dr. Copper is at a 2-year low. There was an article that Zero Hedge covered on this in the last couple of weeks. And guys, and I was talking about this, other people in the gold and silver community are not talking about this. This is great news for silver. The lower the copper price goes, the less likelihood there will be more silver byproduct online, the more likelihood that these base metal miners will not reinvest into their current mines or will delay investment and may even lower that annual silver byproduct production. And we've seen some of that already. I covered this in the last 3 or 4 weeks. Steve St. Angelo was talking about this, how mine supply in Peru and some of the other large silver mining countries was down, and that was because base metal prices were down. So interesting stuff. Good news long term for silver. We want, trust me, we want a low copper price. We want the copper price to stay as absolutely low as possible. Bloomberg actually just put out an article. I found this today. Bloomberg Intelligence from Eddie Vanderwalt. It's the copper-gold ratio signals bulls may have got carried away with gold. I disagree here, but he's talking about the copper-gold ratio, and bullion peaked at a 6-year high of $1,557.11 on Wednesday, and it now takes less than 4 ounces of gold to buy a ton of copper. The average over the last 5 years is 4.7. So changes in this relationship are interesting because one metal is a haven and the other is an input into industrial applications. That makes their relative valuations a good window into risk appetite, lowers less. Actually, yeah, I think it just signals that the global macro situation is becoming bad, that people are not focused on growth. And China is the copper market, okay? There's tons of people out there that are copper bullish. All these investment bank research reports that are saying that electric vehicle demand is going to be the next driver in copper. Well, if China decides they're not going to be buying nearly as much copper internationally, if they're not going to be importing as much copper, the copper market's going to lose an enormous amount of their demand, and the electric vehicle market is not going to offset that. It may offset part of it, but it's not going to offset a lot of it. And this is all about central planning economics. So electric vehicle demand is not going to replace, with their copper demand, all of the Chinese copper demand that's been pulled forward. Guys, over 70 years of copper demand, it might even be over 100 years of copper demand in China was pulled forward into only about a 15 or 20 year span. So we want, as silver bulls, we want a low copper price. We want that copper price to stay at $2.50 or go below. We want copper miners with a lot of silver byproduct to go bankrupt and shut or not make capex investments into their mines. We want those guys to shut down their mines or say we're not making investments into our copper mines right now. That's what we want as silver bulls. Okay, a couple more stories here on this quick little update, and then I'll take a look at listener questions and comments. There is another article that other people are not covering that I think is very important, and this shows that even though gold and silver have had a big rally, a lot of investors do not want to finance gold and silver mining companies. Okay, so the generalist investors, the large pools of capital, the professional money managers, the institutional investors, a lot of hedge funds, a lot of the bigger hedge funds are not interested right now in very big funding for gold and silver miners. So this article came out, it's behind a paywall on the Toronto Globe and Mail, but I found a free summary of it by, let's see, the guy who wrote the article, his name is Niall McGee, Neil McGee. I think he's Scottish, like Neil Ferguson. And this article originally came out on August 26, 2019. It says, despite gold's rally, miners face chilly market for raising equity capital. And in this article, it summarizes a deal that went bad. So New Gold, which used to be a very well-respected mining company until they had the fiasco at Rainy River, and New Gold almost went bankrupt because of Rainy River. The mine cost way more. It was not on time, not on budget. The costs of the mine were too high, nowhere near projected, and the CEO had to step down. The board of directors, a lot of them were changed. And recently, New Gold did a bought deal in which brokers buy stock from the company and attempt to flip the shares to investors, preferably in a matter of hours. And unfortunately, guys, this deal, it was $150 million equity issuance, and the deal went really bad. So a third of the total equity was not able to be sold immediately, and it took Okay, let me read this. A source familiar with the deal said that after a more than 2-week effort, the syndicate of investment banks that did the deal, led by BMO Nesbitt Burns Incorporated, finally cleared all the remaining unsold shares in New Gold. So it took 2 weeks to sell the last $50 million, the last third of the tranche of new shares. There was no demand for the shares initially. And I spoke with Nolan Watson about this, who, like I said, has his finger on the pulse of all the funding deals for gold and silver miners, who either he's getting offered the deal and it's not good terms and he's turning it down, or he's finding out if the gold miners, which ones can raise capital, which ones can't, which juniors can raise capital, which can't, etc. And what he said was the investment banks were very, very worried. The investment banks were holding $50 million worth of stock that they thought that they could flip at a profit within hours. And instead, they had to hold on to the shares for about 2 weeks, $50 million worth of New Gold shares. And they were finally able, after 2 weeks, to sell all the shares at a break-even price. They did not make a profit on the shares. And this has spooked the investment banks in Canada and Toronto, the investment banks. So the generalist investors, the large pools of capital, are still, they may have a toe in some of the gold mining ETFs and in some of the higher quality companies like Franco-Nevada, Kirkland Lake Gold, some of those, or some of the gold mining ETFs, the larger ones, but they are not interested at this point, guys, in doing large financing deals. Now, you may see smaller financing deals for some of the gold miners of maybe a couple $1,000,000 for a junior, maybe a producing miner raises 8 million, 10 million, 20 million, maybe up to 50 million. I think I've seen a couple deals for 50, but the $100 million or more deals that some of these miners really need to help fix their balance sheets, not available. Okay, not available yet. And this is something that I have not seen anyone else. The story has been out now since August 26th. I have not seen anyone else in the gold and silver community talk about it. It is a big deal because we've had a very big rally in gold and silver prices in US dollars, and yet the funding for a lot of these gold miners that they really need is for, especially over $100 million, is not available yet. So that deal, it did not go through smoothly. Yes, the investment banks did not lose money, but they also did not make a profit, and it took them 2 weeks to sell the last third of all the shares. And so it has the investment bankers spooked. And until the generalist investor sentiment changes about gold and silver and money can be raised, the gold and silver miners are going to be very wary about bringing on new mines and making investments, big capex investments into new mines, etc. There are some miners that have good balance sheets that can do this, but the industry overall does not have quality balance sheets. Although things are better than they were in April and May, things are still, the balance sheets of the mining companies is still not great, especially if gold and silver, the correction continues. But it sounds to me like more and more smart money is starting to buy the dips. It's just no one is interested at this point in big financings yet for the gold and silver miners. And the lack of financing might actually be a good sign, because then there's this wall of worry for the gold miners to climb, because so many people are skeptical of this bull market now. And if you're familiar with Sir John Templeton, bull markets are built on skepticism, are built on pessimism, rise on skepticism, go higher on optimism, and die in euphoria. I think that's the Sir John Templeton quote. But this is the reason gold and silver will do well long term. In the short term, anything can happen. We could have a further correction. In the long term, the global macro situation is dictating that these stupid governments, and all of these governments are stupid, and different degrees of stupidity, and all these central bankers, different degrees of stupidity, are going to just really ridiculous policies of higher taxes, devaluing currencies, not allowing asset prices to fall, and zero interest rate policy, and even negative interest rate policy. And then interest rate cuts and quantitative easing. And this financial repression is hurting savers. It's hurting retirees. It's even hurting the insurance companies and banks now. Yeah, RR says governments and central banks are going to inflate to the moon. Their official government statistics, RR will not say that. But you have, I forgot the guy who just said it. Let me pull up my Wall Street for Main Street Facebook group real quick. And thank you very much to my almost 150 now Patreon account contributors who are allowing me to keep this going. Okay, the BlackRock chief investment officer says the end game is coming and central banks will debase everything to spark inflation, so deflation will not be allowed. Falling asset prices will not be allowed, even though it's beneficial. He said this yesterday, or Zero Hedge did an article on it yesterday. Okay, thank you for the super chat, Curtis, Professor Curtis. And thank you for the super chat, Overland Bobcat. I'm glad you like my work. I appreciate it. Alan Greenspan even said that it's more likely that negative interest rates will eventually come, only a matter of time before negative interest rates come to the U.S. I don't know if he's right, but it seems more people at the Federal Reserve, the PhD economists, the over 3,000 overpaid Cadillac Health Insurance, Cadillac Pension Fund, PhD economists who never get fired for being wrong all the time. Those PhD economists, a lot of them over the last couple of years seem a lot more open to negative interest rates than they were even a couple of years ago. So these stories together, guys, if I had more money coming in, and I'm not getting rich off this content, I am starting to make more money now. So thank you very much to the people on my Patreon and also to the people who are my monthly contributors over on my PayPal through my donation link through my website, and the people who tip in once in a while. It's appreciated. If you don't have any money, it's fine. You can just hit the like button. But if I had more money, I would be buying more shares of Sandstorm Gold. If you're getting Sandstorm Gold long-term below $6 a share or around $5 a share, if it goes even that low in this correction, you're getting, I think, a bargain. I think Sandstorm, if it goes much lower, I think there could be a chance that Sandstorm has some larger company tries to hostile take over Sandstorm because they just have so much growth in the pipeline that's not being priced in. And if gold can continue the rally above 1,500, they have the Arizona royalty, which goes from 3% royalty on the revenues per year to 4%. Then the cash flow from that for Sandstorm goes from $5 million per year to $10 million. So as of right now, Sandstorm Gold, since gold is still above $1,500 an ounce, Sandstorm's going to start getting an annualized $10 million per year in that revenue royalty. They have a new royalty coming online probably in 2 months or less, the Fruta del Norte gold mine, a royalty on that, and that is arguably the newest, highest grade gold mine on the planet. It's not a massive amount of annual cash flow, but that mine has so much exploration upside. Once the operating cash flow from that production at the mine is reinvested into exploration, they could find another decades worth. This is just my opinion. They could find decades more of gold reserves. There's a lot of geologists who think that. Bill, none of Sandstorm's growth in their pipeline is priced in. The royalties that just came on, the royalties and streams that just came online earlier this year, the Cerro Moro silver stream and the Arizona gold royalty, none of those were priced in, even though they're cash flowing now. That's why the shares went up like crazy, because the market started to realize that they had a big increase in revenues coming. But by the way, guys, Sandstorm Gold, a lot of exposure to silver. Sandstorm Gold now has a 1 million ounce per year silver stream online. So if silver goes to $30 or $40, that's a lot of extra annual revenues from the silver stream. There's other good bargains in gold mining stocks. I think First Majestic Silver dropped 9% in one day. That's pretty nuts. Am I rich yet? No, I'm not rich yet, because people try to get me to work for free, which is just ridiculous. Get me to do all these hours of work for free, and then YouTube tried to financially ruin me. But I do have a decade of experience working in the financial industry, interviewed hundreds of experts, and then I've read over 500 books about business, investing, economics, entrepreneurship, and read thousands of articles. Yeah, First Majestic Silver crashed. That's insane that it dropped 9% in one day. Sandstorm doesn't mine. Their margins are enormous. Their all-in sustaining costs are like $300 for their business, so they generate an enormous amount of free cash flow. Right now, they have 66,000 ounces per year of gold equivalent ounce production. So you multiply that times the current gold price, and that's around $90 million in annual revenue. And they're generating a lot of free cash flow. YouTube actually stopped all the growth on my channel. Literally, subscribers, in 2016, subscribers, I went from around 2,000 new subscribers per month growth rate down to 0, and people were being removed. There were dozens of people being removed per month, and all my growth stopped, and all my videos were demonetized. But I've turned it around. And this is why it's important that I have money coming in from other places besides YouTube. Silver is in a correction, but the correction could be short. Thank you for the super chat, Grace. She asks, is silver price in a correction, or there's other factors that are causing the price to drop this week? Well, silver has been rallying. Gold and silver guys have been rallying even though the dollar has been strong. So that's a sign that the global macro situation has been getting worse. When you see gold, silver, Bitcoin all rallying with the dollar, this is a sign that the global macro situation is getting worse. Look, if the global economy was doing well, base metals and oil would not be in trouble. So you're seeing gold, you're seeing big dislocations between gold, silver, precious metals miners, and oil, energy, and base metals. You heard that silver is artificially low and it is actually worth more than gold because there's less of it. There's less above ground silver than above ground gold. That's all I'm going to say. At some point, we may see triple digit silver, but then when there's triple digit silver, it becomes all these currently uneconomic things to mine silver from, like mining silver on the ocean floor, those start to become economic. So if we do go to triple digit silver, let's say we go to, this is hypothetical, not financial advice. Let's say we go to $150 per ounce silver in 6 years. Then at that price, it then becomes economic to start mining silver on the ocean floor. Or even for these billionaire guys to start talking about mining silver from an asteroid. Or for every last scrap of silver, and all silver scrap is not mined, all silver scrap is not recycled in a junkyard, it then becomes economic to start considering trying to figure out how to recycle every last scrap of silver from a junkyard, or start to filter out the grams of gold and silver that are floating in the ocean. There's actually a lot of grams of gold floating in the ocean. It's just nowhere near economic at current gold prices to get that gold out. Because the gold is literally microscopic. So in the short term, silver could go lower. This is why it's dangerous, and I've talked about this and people criticize me. This is why it's dangerous to buy all of your position at once. This is why when I want to buy more shares of a stock or I want to buy more metal, I wait till the price drops. And then I just add a little bit more. It is very dangerous to buy your entire position at once because you could mistime things. Thank you for the super chat, Greg. I appreciate it. And someone emailed me asking about the professional money manager industry, well, the mainstream financial industry, about how they view gold and silver. In general, they hate it. So when I was a regular stockbroker, what would happen is some people would occasionally come in and they would want gold or silver exposure, and what we would try to do was direct them. This was over 10 years ago when I was a regular investment advisor representative with my licenses, and we would try to direct them into like a high commission gold mining mutual fund that also held maybe a little bit of bullion, but it was really high commission. It was garbage. So it only held all the largest, most garbage gold mining stocks just because of market cap, and it held gold, but the commissions that they were charging, the fees were super high. And you cannot, if you're in the regular financial industry, if you're a regular IAR stockbroker and you write a lot about gold, you're risking getting fired. It's really sad. At a lot of the major firms, if you say too many good things about gold and silver, and if you're writing a newsletter for your clients, you say too many good things about gold and silver, you're risking getting fired. The narrative is that it's almost always a good time to buy the dip on regular stocks and regular bonds. Oh, thank you for the other super chat from BB FreeTube. I don't remember if I did the stupid disclaimer, but people are asking me about some of these juniors, and I would be very, very cautious. You have to go and look. This is hypothetically. You have to go and look at how much cash in the treasury on the balance sheet the junior has, and if they're going to have to go raise money. Because even though gold and silver prices are high, if the junior has no cash and has burned through it all, and they have to go raise money, it could be on really, really bad terms. And if they do a big dilution, let's say they do a 30, 20, 30, 40% dilution, and then give one warrant for each share that they sell in the equity offering, one warrant too, that's going to be a massive dilution and the stock could crash. So you have to be very careful with juniors. Juniors are raising some money. Some of the best juniors are raising some money to drill now, but there's not enough money to go build a lot of new mines. And the larger miners, as I talked about with the New Gold deal fiasco, has Canadian investment bankers spooked. But this is good news for the best gold and silver companies who don't need to raise money. So if they don't need to raise money, if you're a Kirkland Lake Gold or you're Franco-Nevada or you're a Sandstorm Gold, there's going to be opportunities, Pan American Silver, there's going to be maybe even First Majestic, there's opportunities out there to go and do good deals right now because the other miners need capital and can't raise it. So there's opportunities to go do good deals. Well, all I can talk about is when I was a stockbroker, you were not supposed to say anything good about gold. It was the time to buy stocks on the dip. That's one of the main things. Or a bond fund or sell annuities. Annuities are very big commission. Most people aren't aware of this. You have to do your own research on this. You have to read articles. But like a widow or an orphan would come in and they would have inherited normally like hundreds of thousands of dollars, sometimes like 500,000 or more. They wouldn't know anything about investing or finance. And then the broker, those would be the prime targets for an annuity. And so then someone would buy, hypothetically, like a $500,000 annuity, and then the broker within a week would get a 10% commission check. So of that $500,000, then the broker would get, by selling that annuity, a $50,000 check in a week. So they don't tell you that. You have to know it. Because if you ask, they're going to dodge it. They're going to dodge that question. And that's why a lot of stockbrokers are just sales jobs, guys. A lot of stockbrokers don't really know anything. There are some that have a CFA, that have a Chartered Financial Analyst designation, and they know some stuff, but then they're still not allowed to recommend smarter companies normally. They're risking their job unless they own their own firm. I know a lot of people that are still in the financial industry that work for very big firms now that are making good money that are very, very unhappy. We're talking like deep, deep depression. Thank you for the super chat, Dirty Bubble Rising. Well, I think we're going to see $25, $30, $35 an ounce silver in the future because you know why? That's where the cost of almost all the new potential silver mines over the next 5 to 10 years, that's their costs. So in the next couple of years, a lot of the primary silver miners, guys, are going to mine through all their low-cost silver, and then you're going to be looking as a new price floor at $18 to like $23 an ounce silver, for sure, because the miners are mining all their highest grade, lowest cost silver now. See, the stock market, and a lot of people in the market think that there's all the silver available at a certain price to mine, and the truth is the exact opposite. So we've had a silver bear market up until very recently for 8 years. And a lot of the highest grade, lowest cost silver was mined during that bear market just so the primary silver miners didn't all go bankrupt. And yes, they loaded their balance sheets with debt, and they did a bunch of stupid stuff with share dilution, but the only operationally way that they could survive was to mine their best ore and hope the price rebounded. But now they haven't been able to raise capital yet. Oh, we'll see $35 an ounce silver eventually. We're gonna see $23, $25 an ounce silver in the years to come for sure. Because if you look at the project economics of a lot of the silver mines that were found during the bull market in silver from 2009, 10, 11, a lot of those project economics, the costs of those silver mines are very high. They're not. Almost none of those silver mines, guys, are economic at $20 an ounce silver, $22, even $25 an ounce silver. So, if you're bullish on silver, watch the copper price. Because about 2/3 of all the silver that's produced every single year is as a base metal byproduct. And the majority of that silver is from copper byproduct or a byproduct of lead and zinc. Well, Gary says 21 soon. We have to see, Gary. We have to see silver hold 18. Silver has to hold 18 for weeks before it can move higher. If silver drops below 18, guys, it's going to take weeks, if not a couple months, to rebuild. Unless the Fed announces rate cuts and QE soon. One of the reasons I like Sandstorm Gold so much, besides them having diversified cash flow, they also have the 1 million ounce silver stream online now, is they don't need to raise money now. They don't need to go out and raise money in a climate where it's very bad for gold miners and silver miners to raise money, which means that the miners might give Sandstorm Gold another good deal soon. We could see in a couple months Sandstorm Gold announce another good deal. And that growth would be beneficial long term. Okay, guys, well, that's it for right now. I'm going to go ahead to dinner. Thank you for your time. And tomorrow I may have a show on the negative yielding debt for corporate bonds. I think that would be interesting. I started researching the debt to equity ratios for some of these large corporations, and there is a lot of large publicly traded corporations now that the stocks are up a lot, but their debt to equity ratios are even, or there's more debt than equity now. But no one cares. As long as these large corporations have earnings and they're growing earnings and they have some free cash flow and they're paying their dividend, no one cares about that right now. Even though the large corporations have loaded their balance sheets with debt and their debt to equity ratios are way skewed compared to decades ago. My ribeye was good yesterday. Thank you for asking. I appreciate it. Okay, let me make sure I covered everything, all the stories here. So cover that. I will put links if you want to read the summary of the botched deal from New Gold. It's on the republicofmining.com. It'll be in the information and description section. And thank you guys very much for paying attention and listening to me. Been working my ass off to get over 5 million views. I was surprised they did it this soon. Thought it would take another month or so. The next major goal is 30,000 YouTube channel subscribers. Hopefully we'll knock that out of the way quick. Now we could just focus on growing this thing as quickly as possible. But thank you again. Oh yeah, one last thing. So I got this from Gene Goodman, who's a longtime podcast listener. He's a professional musician. This is some fan art or fan music. You guys let me know if you like this, if this is catchy. He said he sent it to me. So it's music that he made for my channel. You guys let me know if you like it. It's under a minute. Here we go. We'll close with this. I'll let this music play out before I shut it down.
Wall Street for Main Street. Changing the way you invest. Wall Street for Main Street. Changing the way you invest. Wall Street for Main Street.